I wasn't looking at the the live feed. All right. Economic data. Sorry, folks. I really apologize. We have the ADP report coming out today. Excuse me. We had ADP come out yesterday. Now I'm completely thrown off my game. Came out yesterday, 525,000 expectation, actual 517. A nice move higher from the prior read of 176,000 jobs. Chicago PMI. Excuse me. Came in with a big beat. Pending home sales didn't miss. They crashed. Initial jobless claims. They're set to be released this morning. We had a nice drop last week. The market is expecting 675,000 initial jobless claims. Hopefully this comes in a lot lower so these poor people can get their lives back together and not file with the government for a paycheck. Nothing's more sadder to me. And then we have at 10 a.m. the Institute for Supply Management, 9:45 the Marquette Manufacturing PMI. And then, of course, tomorrow we have the Pimp Mac Daddy of them all, which is non-farm payrolls. So a lot happening today and tomorrow. Let me say good morning. Kevin, yeah, sorry about the audio. Jonathan, hey, Big Bear. Sam, good morning. Yeah, no, I did sleep. I just put on this shirt and I passed out. I got cold. I put it on in the middle of the night. It was on the side of my bed. And my hair, at least I have a good head of hair. But in the morning, I get a real serious case of bedhead. That's why I don't have the picture on with me in the morning most of the time. So let's get to it. Oh, and don't forget, TrendSpider, 35% off. Automate your grunt work, folks. Take advantage of it. I'm not going to go through my spiel. I don't want to take up more of your time with that. Okay, let's get to the pre-market activity. All right. Russell 2000 up this morning by about 1/3 of a percentage point. We did see a fade yesterday across the board on most averages. And this 4-hour bar, which opened up at 5 a.m., a little bit of pressure, but we haven't broken trend. This could be a head and shoulders setup, left shoulder, head, right shoulder. Our neckline's down here. The S&P 500 up 0.25%. We've come off the highs of the session. We did break out yesterday. We pulled back, retested. Now we're attempting to follow through. The NASDAQ 100. We are up. We were up higher. We faded a little bit, but we're still up higher. Now, here's where things get kind of strange with the NASDAQ 100 is that yields yesterday had a very strong day, yet the Qs broke out. Now, today, if you take a look at this chart, I'll leave it up to you. I'll render an opinion, but I'll leave it up to you. Here you have daily chart triple Qs. We know they trade lately inversely of yields, which are rising. Yet yesterday we broke out with the rising of yields. Is the market getting used to these rising yields? Maybe. Or is this a bull trap? Because when you take a look at, we'll first go to the 10-year yield weekly time frame. We don't have a new weekly high, but we're at the highs of last week. Lastly, when you take a look at the daily chart of the TNX, which is the 10-year Treasury Yield Index, Does this look like it's going higher to you, or it's going to break down? Personally, I think it's going up higher. And that puts into question, if we break out to a new weekly high, or if, God forbid, we start nearing a 2% mark, what happens to the Qs? Do they shrug off rising yields? I don't think so. And the other thing we need to think about, and this goes to the broader market, is all of these companies have been buying back stock. They've been borrowing money at near zero interest rates to buy back their own stock, boosting their EPS, boosting their stock prices. At what point on the percentage yield curve do they stop doing that? Have they stopped doing that? That's an open-ended question. I don't know yet, but we'll get a better feel in the coming weeks. Back to the pre-markets. The U.S. dollar. Now, the U.S. dollar broke out here. This is a 4-hour chart. These are all 4-hour charts, unless I say otherwise. On the 30th, follow through, failure to hold yesterday. Then we recaptured very strong price action. Now we're retesting. Retest 1. Now we have retest number 2 of the support level. If it fails and we break down below 92.98, game on for gold. I personally think that we're probably going to break, and I'll tell you why in a moment. Okay. The reason why I think that we're probably going to break is when you take a look at the Japanese yen. The Japanese yen on a daily time frame. As a matter of fact, let me bring up the FXY. I'm probably going to be buying yen today. All right, so here's a daily chart of the FXY. Let's go to my annotated view. And this means a lot, folks. I know some of you are out there. You simply trade stocks, and if you want to get a directional feel for which way some of your stocks are going to go, you got to know correlations. And if you're looking to buy gold stocks, you got to know what the dollar is going to do. You have no other choice because they trade inversely most of the time. And you can see here the yen has RSI at 18.41. Very, very nosebleed oversold territory. And we're looking for support to get hit very soon at around 84.62 to 83.54 on the yen. And if we go back to this chart here, you can see I already have my alert set. I do think we're going to break lower. Hopefully we get a washout today, tomorrow. And then we look to buy yen, either buy the outright FXY or sell puts. That's a bullish play when you sell the puts. We're the casino, not the gambler. When we sell puts, we're generating cash flow. And if we do see a bid under the FXY, meaning the FXY begins to firm up, then we're going to be looking at the reaction of the dollar. The dollar is probably going to shake a little bit. And if the euro begins to firm up, I haven't looked at it. I know Sam's out here. Sam, how's the euro looking to you? Sam's over in Italy. The euro's catching a bid. So this is a 4-hour chart. We're consolidating on the euro. In fact, we have broken out. So this is why I'm becoming more and more bearish on the dollar. You're seeing strength on the euro. The yen is in oversold territory. If they go, that means the dollar goes, meaning if the yen and euro go up higher, the dollar goes lower, and that means gold stocks, silver stocks, game on to the long side. So this is what we're watching. Crude oil spiking higher here. Food prices really moved up higher yesterday. Soybeans in particular, folks. So it looks like that ag trade is coming back. Let's go to wheat first since it's in front of me. We're pulling back. We had a huge spike yesterday. Look at that. Now we're pulling back. Let's check out soybeans. All right, Sam, for euro, 172. Is that 172 on the FXE? Where are my soybeans? What a nerd I am. Where are my soybeans? Here we go. Okay. We had a continuation move up higher overnight. So here was yesterday's move, very powerful move in soybeans. So input costs, we own a company called Cal-Maine Foods. It's an egg company. They had good revenues, but their bottom line was impacted by rising input costs. What were those input costs? You're looking at it. They got to feed chickens. Their chickens eat soybeans. So it's hitting businesses, folks, businesses that we own. Inflation. All right. Gold, did we go over gold? It's now positive. And we're breaking out here on gold. Very, very good. We're holding 1,700. We had a very good day yesterday. Let's check back in with the NASDAQ 100. It's put on a little bit of real estate here since we last spoke. All right, let's do some chart requests. Gotta go to the members area. Ricardo, you're screwing me up here, man. V, J, and X. Are you messing with me? All right. If I didn't have email addresses in front of me, I'd show you what I'm looking at here from one of my members. I don't know if he's got 3 requests or what. All right, we're going to check in. I'm going to go by you verbatim. First, I'm going to type in VJX to see if he's messing with me. VJX. Is that a symbol? No, oh, no. Yeah, it's not. There's no symbol. All right. He probably doesn't even realize. All right, Visa. All right, weekly chart. Month is closed, quarter's closed. How do we close out the month for Visa? Not that good. We broke support on the automated trend line. 218.04, that's the number to watch. It was unable to hold it last month. Let's see if it can do it this month. Weekly chart. You have a little bit of a volume shelf, not a little bit, a reasonable shelf, which we did not hold at 211.98. At current, we're trading down below it. The week is still young. 2 trading days left to go. Maybe we'll rally back. But look for a close above 211.98 today. That would be bullish. Daily chart. It attempted a breakout on a daily time frame. Folks, this is the value of TrendSpider. I save so much time, it's ridiculous. Automated trend lines. We've been attempting to break out, rejected. And we broke down below support yesterday. We really need to see a pop up higher here. Take note how the raindrop charts picked off this rally off the lows. We had a big sell-off here on the 19th. A couple of days later, we flashed a raindrop chart. This is a mixture of volume-weighted moving average and candlestick charting, and we moved off the lows. So this was a sign, an indecision bar, very similar to a doji formation on a candlestick chart. But you didn't get that on the candlesticks. So watch for a breakout and a close above, let's call it 212.15 per share today. If we get that, it's game on. It looks interesting. I'm not going to say it doesn't. But where it gets really interesting is if we close above this level here at 218. So Visa looking good. All right, that's V. His next symbol is J. I've never seen so many single-digit requests before. All right, Jacobs Engineering Group. Monthly chart. How do we close out the month? Very, very strong. Very, very strong. Beautiful chart. Beautiful. It looks as though we're coming up here to 137.55. How did I figure that out? Click of a button. Use the link below, 35% off. Weekly chart. We have a beautiful breakout here. We broke out last week. Actually, we broke out a couple of weeks ago, then failed. Then we recaptured. Now we're retesting. This is a very, very nice setup here on Jacobs Engineering. I like this chart quite a bit. Daily chart. Beautiful day. Yeah. I mean, wow. This is nailing it on all time frames. It's really nailing it. We have higher lows. Nice. Exactly what you want to see. And we're pausing. Orderly pullbacks. And we had a continuation breakout yesterday. What's not to like here? Good volume into the close. For those not familiar with raindrop charts and how to read them, again, volume-weighted moving average mixed with candlestick charting. The left side of your raindrop is the AM morning session, right side afternoon session. And when you get the big fat green bellies, that means you had buying into the close. Very powerful. Good stuff. We're probably going up higher here. X, U.S. Steel. It's been very strong of late. Major breakout on a monthly time frame. Loving the 2478 mark as support. We are a bit extended above the third standard deviation Bollinger Band on a monthly time frame. It's come a long way very, very quickly. A consolidation would be nice here. But a major, major breakout. Weekly chart. Again, a major breakout. Couple of trading days left to go. Higher lows in RSI, weekly time frame. Volume thus far this week, assume we close up, is higher than average and very bullish. Daily chart. We broke out above resistance on Tuesday. Down day yesterday. No big deal. Actually, not a down day. We closed off the highs of the day. And I think we move up higher. We may consolidate here. That's fine. But I think we move up higher. This is in total bull mode. So, Ricardo, good selections here. Very bullish. Sorry to falsely accuse you of messing with me. But good stuff. With that, folks, I'm going to say everybody have a profitable trading day. Watch out for those initial jobless claims. Until later on, have a great day. Be well.